Hey, you wonderful people out there. Hope you had a great investing day. My name is Chris, and welcome to the Business Report Show. I wanted to comment a bit about Affirm Holdings IPO today and some of my non-audited statistical analysis that I did to see if Affirm's a stock that one should pick up this week. But before I begin, please hit the like button and don't forget to subscribe so you can stay up to date with all my videos. As well, everything I discuss in today's video is just my personal opinion. Always seek a professional before investing. So it looks like Affirm Holdings had a wonderful day today in their IPO, opening 98% above their IPO price of $49 per share. This was due to strong sentiment from investors after Affirm and their book runners Morgan Stanley and Goldman Sachs increased their initial price offering from about $35 to $49. Now, typically the book runners get more market intelligence the day prior. They also gauge the sentiment amongst their own private clients, so they're able to raise the IPO price if they feel like they can raise more capital for the company. If you don't know who Affirm is or what they do, it was founded in 2013 by PayPal co-founder Max Levchin, and has become a leader in the buy now, pay later space that offers point of sale loans. The company allows customers to finance online purchases that can be paid back in monthly installments without accruing compounding interest. Since 2013, Affirm has established a network of around 6,500 retailers, including Peloton and Walmart. In an update in its IPO filing, Affirm said they had more than 6.2 million people using their platform, and Affirm also partnered with Shopify last year, allowing merchants to offer installment loans on products they sell. Affirm's service is of course popular amongst retailers, as most retailers just want to churn product and inventory, and they may care less about how it's getting paid for. According to their SEC filing, Affirm brought in roughly $510 million in revenue for the fiscal year ended of June 30th. It was a 93% jump from last year. In the 3 months ending September 30th, revenue grew 98% year over year, while net losses fell by roughly half to $15.3 million. These are all positive metrics for the stock, which is why it opened significantly higher today. Now, the big question is, how do you know if it's a good time to get in on the stock right now? It's very difficult because there's no secondary market data to analyze, and we're not sure if the current price has priced in the recent positive financial data yet. What I decided to do was actually map out the recent IPOs from 2020 to see if there was any underlying technical trends. Now, before I discuss my findings, please keep in mind that I did this purely by looking at historical data. This method is not a proven method to predict the future of any IPO stock prices. So please just take this as a discussion point and not advice to go pick up the stock tomorrow. So I went through the top IPOs from 2020 and picked out the ones that I felt would be a good representation of the type of technology-based stocks that investors are looking for right now. The companies I chose were DoorDash, Airbnb, Palantir Technologies, Asana, Bill.com, Snowflake, and Unity Software. The next thing I did was pick data from the following investment periods: the pre-IPO price, the first day closing price, the second day closing price, the 5-day closing price, the 2-week closing price, and the 1-month closing price. I picked this range because I think for investors looking at Affirm, we probably just care about near-term data. As prices were all over the place, I charted out the share price percentage change and compared the changes across the various data points I just mentioned. The line graphs that I produced based on this data showed a very interesting pattern when it comes to pricing changes after the IPO date. So the first chart shows the percentage change in price in comparison to the IPO price. As you can see, there is a pattern between most of the companies, and none of the companies fell below their IPO price during the first month period, which should be expected as this time frame provides very little news or company updates that would affect the share price significantly. This second chart that I created shows the percentage change in price in comparison to the first day closing price. I wanted to see if the prices would fall or increase off of the first day of closing, as that is the most applicable in my little research project here. As you can see from the chart, the numbers are all over the place. Clearly, Unity Software did great for retail investors who got in on day one, as after a month, the stock price was up approximately 35%. Not so good for Asana and DoorDash investors, however, as both are down double-digit percentage points for investors who got in on day one. Snowflake and Airbnb had the highest percentage increase on day one from the IPO price, and both showed similar drops in second day trading, with Snowflake slightly in the negative after the first month and Airbnb slightly above after the first month. The top three out of the bunch after the first month was Unity, Bill.com, and Palantir. Just from looking at this chart, it appears to show that if you have a good and at least positive second day, you tend to finish positive at the end of the month. Now, the last chart I want to show you is the trading volume. I think this is very important to understand, as share price at this point is driven mainly by retail investors. Insiders are still in their lockup period, so they are in a holding pattern in terms of selling their larger blocks of stock. Volume definitely slows down significantly, which probably explains why pricing changes are not that significant. I guess unless you're DoorDash and Asana, which analysts who picked up both stocks are bearish on the valuation. And that's important to note that as for the first couple months, the share price will be testing its upper and lower bands, barring any significant news stories that come out. This means most of the price changes will come from analyst sentiment. So those are my conclusions, and as I said, take it with a grain of salt. If you are absolutely in love with Affirm and believe in the business model, then you should lean towards picking up the stock. If Affirm has a decent day tomorrow and closes with a positive gain from yesterday's price, then statistically speaking, amongst my small sample here of stocks, it should do well for you throughout the month. What I will say about Affirm is that it is a revenue generating company that shows signs of growth throughout what they mentioned in their SEC filings. So investors won't have to wait for any significant event or product development before the company churns its first positive dollar. Affirm also has a very experienced management team who have proven that they can succeed in the fintech marketplace. Another thing I will note is that Affirm does have $1.1 billion in debt, so there may be additional IPO raises that may dilute the shares. So if you do invest in Affirm, you may want to keep an eye on the financials to see if they can continue servicing that debt without affecting growth operations. That's all for today's market news that I wanted to chat about. Don't forget to check out my last video that I just put up. I talk about 2 large cap stocks that have pretty huge dividends. One has up to 11% currently. Make sure to hit the like button, hit the subscribe button, and leave me your comments about Affirm or any other IPO stocks that you're currently following or excited to see. Remember to keep on learning, keep on investing. I'll catch you next time.